Hey, Rich. This is for Richard Struss. This is a trade at probably 71 through 80, but we'll start with 70 here. Uh, no problem there. Rich, sorry I wasn't there for you yesterday on time. Anyway, let's take a look at this. Okay, first of all, trade 70. Looking at this move up, the fib looks very good. Looks like your range of advance is good. Yeah, it's a good advance. This one stopped you out. Okay. Yeah, so this one I could probably give you some advanced reasons why this one didn't work, but you know the bottom line is this is just one that lost because you're coming through this area here, which I think is a really good level. You're entering, I don't think too far under this barrier level, so it's pretty good. So it's just all around a pretty good trade. I mean, there's probably some things with the U.S. dollar that might have been a factor. It's an early trend, but still, even had you got a price down here, you might have still lost the trade. Anyway, let's move on. G took the same trade. Okay, 71. This is probably where we started. This one, there's a range here from here to here, and this is something I see you do very often. This may not be a factor, and this candle's very strong. So this one could be pretty good. So this is a good trade, but I'm a little bit concerned with this range bottom. And it did work. So like I said, good trade, but just a little bit riskier. Obviously, it doesn't look bad at all on the 5-minute, but it's pretty good. Okay, it looks like that was actually from the previous review. All right. Okay. Okay, great. All right, so now we're kind of into the next series. Okay, trade number 72, sell order 9:45 a.m. So Euro, Pound, New Zealand, Australian, they were all up. All right, they were all up. Oh, I see. Those two were up. Okay, that's fine. These two being down, that's great. Pulls all the way to there, pulls back. This is just a perfect setup here, and you win. So that's the trade that you're looking for right there, Rich. Oh, nice for the first trade of 2014 too. So I don't know what we're calling that one. 72. So make a note of that. 72. Put a star by that one. Coming into this one, this looks like 30. That's the 5. A little bit of choppy here. I want to take a look at that second file. I do believe there's a 38.2 retrace right here. And there's another one here. So this one, but it's close, but I think it's still an okay trade. I'm a little bit concerned about those waves, so I'm going to bring up my chart. We're going to look on January 6th. Actually, that's a 5-minute, so that's going to be probably a little bit too much data. Momentum, push. I don't know why I like this trade, but I do think that you've got a wave here that pulls back, pushes again, and then so the new wave is right here to here, and then another new wave here to here, and then another small one here to here. So this was actually showing some exhaustion. There might have been something you were seeing intuitively that was telling you this was a good looking trade. But I'm going to say that one's good, but it's not exactly what you'd be looking for ideal right now. Okay, moving on to page 14. Yeah, see, and I did point out there were some smaller waves. Okay. Okay. Silver 65, euro downtrend, pound uptrend, flat. Okay. All right, so you were trading the euro, and this is fine since the markets have stabilized. The euro and the pound have been doing their own thing. This looks really good on the 30-minute. Let's take a look at the 5. 5-minute looks really good too. Yeah, I didn't even need to see that picture. Put a star by trade number 74. Trade number 75. The 30-minute looks really good. You're coming out of this range. There's nothing over here we need to worry about. Just looking at this currency by itself. 5-minute. I probably would have had the fib here, but it doesn't end up making much of a difference. You've got it here. But this is good. This is a good looking trade. Yeah, put another star by trade number 75. That's your trade as well. Number 76, buy order, pound 9 a.m. Good. Trend up. New Zealand down, euro up. Okay, so the euro and the pound are moving the same way. Well, this one right out of the gate, my concern is that you're entering the trade inside of this range. That's going to add risk to this trade. And I can't tell if it hits your stop. Well, it eventually does. So this is always going to be a little bit riskier. So you need to ask yourself if you're entering inside of the range or not. That's one of the things you need to do. And so make a note, come up with a rule for that. You want to enter outside of the range, right? You've got it defined here as 64.75. And so what I'd like to see you do is enter at a price of that or higher for your entry point. And it looks like you could have done it here. It does look like you could have done it anyway. This setup actually is not bad when you look at it. You know, anyway, let's say that I'm guessing that you came back and it was down here. But if you'd have been watching this in real time coming up here, you could have entered at 38.2 and probably even 50%. And the problem with that would have been your ideal target would have been right here. So you need to get down in the range for an entry good enough to get out there. It's interesting that your target was nice and close. You know, so that was a good job. Anyway, this is not your trade, so I'm just gonna let you know that. Yeah. Okay. Okay, good awareness there. 77, type 2 trade. I think I remember this one. I had some comments for you. It's in a range. Interesting angle on type 2. I don't think the type 2 trade is your trade, so I didn't go into it. I just thought we'd talk about it when we got together. There's not a type 2 trade here. A type 2 trade would be, this is so sloppy. See if I can find any other example for you. A type 2 trade would be more like a this barrier here being, and then price going down below down here and pulling back and pushing, and then it corrects the same morning up to this level, and then you take a type 2 here. You're taking a type 2 trade in the middle of traffic here. So that's not a high probability trade there. Basically it's just in a range. Okay. Oh, did I back up too far? I'm sorry. It's getting a little late here. I backed up too far, but it's the same story. You're in a range. Okay, 77. Again, right out of the gate, you're in a range. And it's a 86. It's a 40 pip range. But you're trading inside of this range. You know, looking at this, you know, one of the things that you might have been looking at is, you know, this had not really, it pushed close, but maybe you were thinking it didn't push all the way up. The 5-minute might show us a little bit different picture, so let's take a look at that. I see. See, you entered here, so what I want to point out to you is, even though this is in a range, it pushes here, pulls back, there's a fib there. Pushes here, pulls back all the way to here, so there was a fib there. And then you get a new fib from here to there during probably the release of some economic data. So there's quite a bit of issues with this particular trade. So the thing you need to watch out for is watch out for trading inside of a range. Okay, trend down, found all downtrend. Great. Always like it when I see that. Okay, how are we looking at 5? Okay, your fib should be here, not up there. And let's take a look, see if you still got a range big enough to trade there. I know it worked out for you. Okay, I see. Okay, so the fib would be here. The fib would be right here. Actually, I would start the fib here, and that would put your range at about 0.4 to it'll give you about 20 pips, so you're okay there. And I'm not sure how you would have placed your fib, but this is one of those where I think you're seeing something well. You're not seeing the typical type 1 trade. You're seeing trend strength down, and you're placing your stops and entry and everything where you want. I haven't totally identified what that trade is for you, but typically a type 1 trade would have a fib here. You'd go in here, and then you'd look for a second push down to, this level right in here. So this one didn't quite do it, and I think maybe you spotted that. So this one, I'm just not going to put a stamp on this one here. That's not the ideal trade that I think that you should be trading in a live account to start with. This looks really good. This is coming out of a key level. You've got a great entry outside of the range. Your stop is below the range. This is your trade. Again, put a star by this one. Okay, so we got another one. This one, how big is that move? Move of 96. 36 after recent move of 96. Okay, so you're talking about here to here, and then another. Is it 36? I need to get a little closer look at that one. 64.50. Well, I mean, the first thing before I go into that, first thing is this is an unusual move. So if you're you're trading a pretty big account and you're risking $1,700 in this trade, you're trading it in a way that I talk about money being repositioned here. I'm not sure you're going to do that with $1,750 on the line, because that's not the one that you do over and over again that works out for you. Now, you do this well. I just want to throw that out there because we're kind of getting close to moving to a live account with you. And so, unusual. This is unusual. Is that a good trade? Yes, but maybe not one you're going to feel totally comfortable with high risk. We need to define this. Right? This needs to be defined. Until it's defined in your trading plan and you trade it for a little while, I think when you put more risk on the line, you're not going to be totally comfortable there. All right. And I'm giving you some credit for, I've seen you do quite a bit, but I wanted to give you a little bit take on that. Okay, 27. Okay. All right. Rich, I've seen a lot of improvement over the past 2 series of trades. You still have this tendency to go for a trade that's in a range, and it's diminishing the more you trade. And I think I would like to move you to level 4, where you'll be trading a live account. We'll go over some live trading coaching. Level 4 is no longer a group. It's individual forums, just like we do with level 1, 2, and 3. And the reason why I changed that is because as much as I'd like to just have everybody chat with each other and do what they want. They really do go off track. And really, this is about, trading a small amount of money. I'll give you the guidelines for that. We certainly don't want to trade anything that's going to hurt your lifestyle in any way. I think it will help you to focus more on, those little blind spots of trading in the range. I think it'll probably keep you out of that a little bit. And if you lose some money in the live account, it's not going to hurt you, but I think it'll be a good experience. And secondly, what we want to do at some point after we get maybe 1 or 2 series under our belt is we're going to bump that up and find out where your risk tolerance level is. Now, the other thing that could happen along the way is that you could do extremely well and get a whole nother lesson thrown in there that happens for some people as well. You might get a little euphoria, and this might change your behavior. That could be a 3-week stint, could be a 3-month stint. What happens is if you do get euphoric, and I mean, it happens to everybody at some point, you really feel invincible, and you just start trading anything you see. And for a while, it works really well, and then it stops working. So you make a whole bunch of money, then you lose a whole bunch, and then I remind you, to trade what you learned how to trade, what you see well. And so, hopefully you don't have to go through that. Just about everybody does at some point. It may not happen anytime soon. May happen in the first or second series. But you get back to me with an email and let me know what you think. But do me this favor. Go over the trades I told you to put a star by. Go over them and look at your trading plan as you're looking at those trades that I said, hey, this is your trade. And look at your trading plan and see if you can see anything that you might need to change. Is there anything we can add in there that, in addition to that, is there anything you can add in there would keep you from trading inside those ranges? And let me know. Let me know if you're comfortable. Just to give you an idea, what I suggest that people start with is 2% of their net worth maximum, or $300, whichever is bigger. I do work with people all over the world, and some of them make $100 a month, so they end up with $250 or $300. Some people have a net worth of $500,000, which would put them at a much higher account. They're not going to get hurt bad trading more money. So it's whatever you're comfortable with, but not to exceed 2% of your net worth. So that's about it for now. Again, sorry we weren't able to get together in person, but sometimes I wonder if these recorded sessions where I'm just focused on what you're doing are have a certain value to them, but I still like to interact, and so we are missing that. So I'll upload this. It'll take me a little while to upload, and then I'll get you the link out. Okay, and then so do go over those trades. Give me your thoughts on trading live. Give me any thoughts on changes in your trading plan based upon reading your trading plan and looking at the trades that I said were your trade. Thanks, Reg.